Hello and welcome again at Stocks Advisors channel. In today's episode, we will talk about Twitter Incorporated, traded at New York Stock Exchange, ticker name TWTR. Well, who does not know Twitter? I think there is no person such, at least in the internet covered world. And of course, Twitter as a company is always, mid or long term, is doing always well, and there is no indication that it won't do in future. Just let's have a look at the bigger scale here. You see it's always growing, almost with a linear growth channel. So in that sense, it's a very stable investment for those who are trading, let's say, long term or even mid term. It's really growing very nice. So you can see this line almost linear, following the moving average 20 and 50 altogether, and moving average 200 is being on belief. So it's really stable growth. But what actually happened today? So let's come back to the current situation to understand how we can trade here and actually what is happening. So first of all, the quarter report news were released and they were positive, but there was a statement that for upcoming quarter it's not expected to have a similar, let's say, profit, and that's what killed the price today. It's really funny, actually, very rare situation when on momentarily positive news, but on a, let's say, worse expectation, the price declines. What does it mean? It means that, okay, the gain that we had for this quarter, which mainly, actually, you can see starting from the mid-level of about 45.50, and finishing with this really nice combination of evening stars, you can say, by beginning of March. Now it's cancelled because actually the news, simply speaking, says, yes, we made this move and it was well validated, but we don't expect to have similar profit in future. Therefore, what happened with price, which was preparing actually to have this nice converging channel, almost a flagging triangle here, to resolve positively, but because this news was with this, let's say, bad expectation outcome, the price just pierced. So the pattern of triangle, let's name it R1, R2, this pattern was completely neglected. It was broken. And now, simply speaking, because we don't expect, or the Twitter is not expecting actually to have similar profit in the upcoming quarter, the price is returning where it was previous quarter. And that's exactly what happened. So you see enormous volume traded. RSI drops immediately downwards, meaning that, of course, there are a lot of new buyers, and only up to 30% people with a profit already in the position, others are new, and you see we are minus 15.15%, finishing at 55.23 by the day, and after hours slightly negative, but actually on the zero, you can say. So what will happen? It still might be, after understanding that this was kind of overkill, the price might rebound, and this we need to keep in the mind, because you can see here we just finished at this very strong support level, which was the previous top, actually the top of the previous wave before the major growth of the current quarter. So we actually returned to the previous channel of before the first quarter of 2021, which is between 45.50 and 55.58, meaning that the price came back and thinking like, what to do now? Shall we trade in the previous, let's say 2 quarters ago channel, because we don't expect similar profits in the new quarter, so everything is cancelled, or shall we return in the price? And both are possible, so we need to take into account both opportunities. And in this case, it's not the classical technical analysis here. It's really technical analysis based on news income. So it's usually a very rare case, but very also nice academic example on how to play. And the way to play here, we just need to base our buying, let's say, strategies on the 2 quarters before, so when these news were not yet there, and when actually this development was not yet expected. So with this being said, how to buy here? Of course, the first buy would be immediately within this channel between 53.14 and actually 55.58. Because if, as I said, tomorrow the price will rebound, so we'll make kind of engulfing, bullish engulfing, so it will start lower and go higher, we need to be prepared to buy in, because otherwise it will be actually a lost opportunity. So let's write it here for ourselves. 53.11 to 55.58. So this will be the first first channel, hoping for quick rebounds. Of course, the triangle R1, R2 is still cancelled, but maybe we will still rebound all the way towards 60, because this is still a very nice also, let's say, support line of previous trade of the triangle formation. It will work as a nice rebound, allowing us to make at least up to 10% profit. And speaking of profit here, let's say for short-term traders, it's advised to target to 10 to 15%. For mid-term traders, of course, there could be much better profit up to 21 for longer term. But since we here discuss daily situation, so this is your target. Take it, re-enter if needed, or check other opportunities. There are also many at our channel. So with this being said, this is the situation. So the first channel to buy. Then, of course, if the negativity will continue, if it will persist and people will still keep exiting and price will keep dropping, well, it's no problem, because as I said, the channel here between, actually even stronger one, between 55.14 and 45.50 is the one that was traded many times, even 2 quarters ago. So this will be a very nice area to buy through. Also keeping in mind that there are 2 major support levels. One is here, which is actually the support line of okay, just a second. So this is the support line that was formed as a growth before we had this accelerated move by beginning of the year. So let's make it thicker and green so that we see it. So this works as a very nice support, and actually that's also the reason why the price stopped here, hoping for rebound. So this trend line, if it pierces lower, will work as a strong attractor. Also, another important parameter here is that moving average 200 is just below it, following almost parallel, so it will also work as a strong support. Therefore, the next level to buy through will be here. If the first channel is cancelled, it will be just, let's say, below moving average 200, so it will be at these levels and a little bit lower here. So this will be the second channel to buy, which will be 48.03 and 50.05. Very strong one, because it will be double support. Actually, it will be support channel with double attractors, to be more correct, because it will be a support channel from previous 2 quarters mid levels, and double attractor will be this thick red line, thick green line, which is the general trend that most probably is cancelled now or will be cancelled, and the moving average 200. So they both will be on the top of this channel, and they will work as a very strong attractor. So let's write it for ourselves as a second call out, which will be 48.03 to 50.05. Very strong channel, extremely strong one, to be honest, and whenever coming, it's a strong buy here within this one. And then, of course, the third one that we need to take into account, although it's most probably even not coming, is to take into account negative news. Although they already happened, so negative catalyst, actually, to be more precise, it's already happening, so it would be quite hard to anticipate anything further. But let's say there is one channel, principal one, which we can take into account, and this will be that between 39.47 and between, actually on the top with 41.51. It's not at all we say price goes there. Again, I repeat myself all the time at every video. It's just the mitigation strategy that we take into account, because if the price declines, we don't want to take risks and actually take profits. We want to still be able to buy through while others will be exiting and make our profit on the trade. So this being said, therefore, we have 3 channels. The first channel is usually based on immediate technical pattern. The second channel is the second technical pattern that will happen if the first one is cancelled. So it's a technical risk mitigation. And the third channel we always discuss is the principal or negative catalyst risk mitigation, where we take into account possible bad news or any negative catalyst kicking in. So with this being said, these are 3 levels to buy, and the way to buy here will be the classical 5 portions play. For those who are not first at our channel, they know what it means. It means that the money you would like to play here, you can split in 5 portions, then you can buy with 1 portion at the first channel. If the price declines to the second technical pattern, so you buy with another 2 portions in the second channel, and if there is a negative catalyst, very rare case, but if any, you buy with remaining 2 portions through the third channel, and then you prepare to make a profit. And if you really go to the lower one, then the profit target will be closer to 15% from all money allocated in the position. So in this way of trading, it might take a little bit longer time, but as you have noticed here, probably we don't take any losses. We don't discuss stop loss. We just say, okay, it's okay to spend extra days, but we buy through slowly. While others panicking and exiting, we just buy through at low levels because we anticipated it and we kept some funds for this. So with this way of trading, although it sounds a bit contradicting, but the worse it gets, the better for you, because you will be able to buy more at the lower levels, at the very principal levels. These are not just arbitrary levels that we discussed. This is very important. So with this being said, this is the way to trade. Very strong potential for Twitter, although of course it's pity with this news, it's coming, but potential is extremely strong. So if you're patient enough, you buy slowly, you can make really, really nice profit here. So good luck with this one. If you like that analysis or that type of trading, please don't forget to subscribe to our channel. Press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.